Hey guys, welcome to my weekly trade recap. So this is episode 6, I believe. This is for the week commencing the 26th of January 2026. So this was the final week of January. There was no trades for me on the prior week of this one. So yeah, there was no video uploaded. But yeah, I took a few trades this week. A few mistakes as well to go over, and also a couple trades that are very good examples of very ideal trades. However, didn't take them due to some circumstances that I will get into when we actually look at them. It was actually the silver dump that happened. I don't know if you guys were looking at silver, the market, but I'm surprised if you haven't seen it, but it dumped 37% or something like that on Friday. So there was a couple of trades that I could have taken on Friday evening, but usually Friday evening is not a time that I want to trade, so I walked away from the market. But the market ended up delivering massively. So we'll get onto those in a moment. But first of all, we can crack on with the first trade. So first trade was on NQ. This was Monday the 26th. This actually was a mistake on my behalf. So yeah, let's get into it. So coming into the session, I only trade, basically the 1 hour kind of gives me, my bias, I guess you could say, for the session. I was bullish for the day because we'd inverse this hourly gap here, and also as well we are above all of the rising MAs, and so I could basically look down on the lower time frame. On the 15 minute, we got a tap into this fair value gap right here, and then a massive explosion away from that fair value gap. And so yeah, I was happy to pretty much look for trades on the 1 minute. However, you can kind of see here that what price starts wicking about. We also wick over this high here. I think, yeah, we pretty much close exactly on it. And looking at this trade back, this is one of the reasons that I shouldn't have taken it. When price starts to chop like this on the 15 minutes, lots of wicks, it's not ideal for my strategy. Obviously a continuation strategy, and I want price to be strong in my specific direction. But yeah, if we look at this, obviously the wicks come in even on the 5 minute as well. It starts to get a bit wicky around here. This wasn't too bad, this play here, pushing away from the MAs, but then we'll get another candle here, and we actually leave a fair value gap on the 5 minute. And so if you shouldn't really be entering lower time frame inverse fair value gaps if there's a higher time frame inverse fair value gap that's still that hasn't been tapped into and that hasn't been inversed either. So for this trade, I actually entered on the 1 minute, which is really bad on my behalf. And yeah, if we go down to the 1 minute, we can actually see we do actually end up inversing this gap up here. This was the gap that inversed, but if we play price, obviously it came up into here, literally just inversed it as well, and I took the trade. Also as well, the 2 minute hadn't inversed, 3 minute hadn't inversed. I don't know if the 4 minute did that inverse. We've got a bit of lag here, guys. There we go. Yeah, 4 minute hadn't inversed, and the 5 minute hadn't inversed. So on this trade, it was a -1, but I really shouldn't have taken it. If anything, I should have waited for this 5 minutes inverse and then take the trade to go break even at this high. But yeah, they took a -1 on this. So mistakes do happen, and I'm really kind of focusing on making sure that I am aware of this in my future trades. So yeah, that was the first trade of the week, -1. Okay, so moving on to the next few trades for the week. Again, this is actually on Monday. Now this is on silver. This is when silver was very bullish, going upwards. We can see above the rising MAs, looking very strong. Had this very nice candle close here on the 1 hour. So I was happy to look for continuation longs. Jotting down to the 15 minute, we can see here that we'd inverse these gaps here, pushed higher, and then we'd actually come down to fill these inverse fair value gaps, and ended up pushing away from the EMAs, which is great to see. Also, you can just see in contrast to the other Nasdaq trade, we got a really nice close above this high with this 15 minute candle, and I was very, very happy to look lower for trades. So coming on to the first trade here, we can see that we have a 5-minute fair value gap that's been formed here on the 5-minute time frame. Again, nice strong bullish candles, wanted to look lower. Coming down into this, we actually tap into this 5-minute fair value gap and then end up inversing this 1-minute fair value gap here. So this is where I actually wanted to enter. So I did enter here with a break even at this high. Now, if we play this price, I actually went break even on this candle here. Essentially what happened was mid-trade, whilst this candle was forming, we exploded over the high, straight away went to break even, and then we snapped straight back down. And so I actually got taken out for break even, and if we play price onwards, it does actually continue up. However, this still would have been a break even trade. I have a fixed 3R take profit, and this actually only went to 2R, I believe, and then reversed back. So that was the second trade of the day. Obviously, you can see here that there was further trades to be taken on silver. If we go to the 15-minute again, another nice candle has been put in here. Just really nice explosive movement, which is exactly what I want to look for. Dropping down to the 5-minute again, we had another 5-minute fair value gap that was created down here, and then jotting down to the 1-minute, we actually tap into this again, and then we enter on this candle here on the inversion of this 1 minute. Now again, break even at the high, which is my break even point. I don't always look for a 5-minute fair value gap mitigation. However, it is just extra confluence. If price is really exploding, likelihood is it may not actually tap into one of these fair value gaps. And so if the setup is clean, you can still take it, but this is just extra added confluence. This was a nice break-even trade. So that was trade number 3, and then this was trade number 4 here. So Monday was a very busy day. If we just go back here, we have another 15-minute candle just being put in here. You can actually see as well this 15-minute fair value gap has been mitigated, and on the expansion of this candle here, we can see we close above the previous candle. You know, looking at this here, we've actually tapped into this fair value gap. This high is most likely going to get run at this point. And so if we drop down, again, we have another 5-minute fair value gap that's been formed here. We have one formed down here as well. So if price on the lower time frames ends up coming into these gaps and then pushing higher, that's extra added confluence for my system. So we come down, we do tap into this gap, and then we get a massive explosion higher. So this is exactly where I bought. Stops beneath the low down here. Very nice inversion of this gap, very strong. Again, break even point would be this high just here, but obviously judging from the 15-minute, we know that this high should be run. Now if we play price out, we get a massive push above, break even on this candle here, and then taking profit at a fixed 1 to 3. So that was Monday over. It was +2 day. Should have been just +3, just these silver trades, but we, like I said, we all make mistakes, and it's important that we learn from mistakes and not dwell over them, because yeah, that's the whole reason that mistakes are made, is so we can learn from them. So yeah, that was my trade day over for Monday, and yeah, let's move on to the next few trades. Okay, so moving on to the next couple of trades for the week. This was on NQ, the 29th of January. So coming into the session, initially I was actually going to be bullish, but obviously we put in this massive 1 hour candle here, which was very strong. When price moves like this, most likely we are going to continue downwards. There's obviously been some sort of news, some sort of something that's happened in the financial markets for this kind of move to occur here. You know, if you just look at this candle in comparison to all these other candles, there's clear signs that something's happened and we are going to move lower. So just judging on that, I actually entered this trade whilst that candle was forming, because again, this 15-minute candle here was just a telltale sign that we are probably going to go lower. There's all these lows down here that are probably going to get run, and my initial plan was to actually sort of go into these sort of gaps here and all this down here, and price actually ended up going lower, I believe. So yeah, anyway, if we move on to the first trade, so when this type of candle happens, usually what we get is a sort of rebalance up into this candle and then a push lower. So that's kind of what I was looking for. Now if we go to the 5 minute, again, these are just huge candles. Oftentimes, like I've said before, if we get these massive candles here, price does not have to pull back into these fair value gaps. It would be nice if price did. However, when the moves are this strong, it doesn't always happen. And so if the setup is clean, then we can go ahead and look for it. So yeah, just looking here, we get a push up into the EMAs, creating these nice gaps here. And then we get really nice follow through. So I'll enter on this candle here. Stops beneath, oh not stops, stops above the high of this pullback. And then break even point here, targeting a 1 to 3. Now this trade actually does end up moving lower. This is slightly unfortunate. Tapped out for break even here. However, you do have to follow your rules. Oftentimes price could just tap this low here, sweep it, and then move higher. So hence why the break even is there. Now anyway, continuing on, still looking for shorts in this session because, like I said, the movement is just so volatile. It's so strong to the downside. We do get this 5 minute gap that was made up here, and it actually was mitigated. So yeah, that's useful to know that this gap has been mitigated, and we got a really strong reaction off it. So again, this is just telling me that price is really respecting these bearish price action pretty much. So if we were not going to be bearish for the rest of the session, this probably would have been inversed, or we would have got a massive push above. Even if it was a massive wick above, it kind of shows me that buyers have stepped in, but there was literally no buyers here. This was or that there are buyers in the market, but sellers are very much overwhelming them. So if we step down to the 1 minute, this gap was formed here. You can see price had actually come back to where it had tested the 5 minute fair value gap and was met with very much a lot of selling pressure and a very nice inverse of this gap, hence why I entered short here. And again, break even point at this low, and if we play price out, it's a very beautiful trade, happened relatively fast, just nice selling pressure downwards, and caught this for a 1 to 3. So those were all the trades that I actually took for the week, and yeah, I wanted to go over a few moves on silver that actually happened, that I didn't actually take just because it was Friday evening, but nonetheless they are very good examples of the system that I follow. So let's move on to those. Okay, so moving on to Friday evening, obviously this is the day that silver absolutely plummeted. We'd already made this move by the time sort of mid New York morning was done. We're already at a 16% move downwards. We'd already intraday almost done 20% downwards. So that, coupled with the fact that it was at this time 4:30 my time in the UK, and that is I think it's 10:30 New York time. Anyway, the main part of the session has been, the morning session's done, and on Friday, after this big move, morning session's done, I was thinking to myself, probably nothing's going to happen now, so I'm just going to walk away, go to the gym, get a session done. That's not what ended up happening, but yeah, like I said, we're all on this move downwards underneath the EMAs, very nice on the 1 hour. This gives us room to go down to the 15 minute. Again, we can see that price was pushing much lower, and yeah, we can see that we're breaking structure to the downside, and yeah, it's looking like this low does want to get taken, which it did here. Now, if we go down to again the 5 minute time frame, we can see that a 5 minute fair value gap was formed, and it was actually mitigated by a tick. So that is confluence that and we got the bearish pressure off that as well. So it's confluence that it's probably going to go lower. And if we look here, there's a nice 1 minute gap formed here, with nice displacement through it. Again, in combination with that 5 minute mitigation, we can enter short here, and then go break even on this candle just here at this low. So this would have been a nice 1 to 1 to 3. Moving onwards, we have this move just here. Now, if we go to the 5 minute, we can kind of see that we're respecting this block here. So you can actually use these wicks as points of interest for action to happen. So we can see this moves up to here. Whatever price action happened here, we've got a strong reaction off it. It's not a fair value gap, but it's a point of interest. So if we get rid of that, and then we get this very, very strong displacement through this 1 minute fair value gap. So we would go break even here. Now I think this actually ended up going lower, if I remember correct. Yeah. Would this have taken us out? Still wouldn't have taken us out if we didn't go break even. However, you can see it sort of chops around after these points have been taken. So it's ideal to go break even there. Now, on this last trade here, this was the final one of the day that could have been taken. Again, like I said before, when we have these really strong push downwards, it's gaps don't have to be mitigated pretty much for proper trades to happen. You can just see the momentum is just absolutely crazy. Like, it's literally falling off a cliff. From the point I was mentioning before, it's down another 10% at this point. So I probably wouldn't really enter this anyway, because it's just down so much. You don't know when there's going to be a bounce. But this setup was really clean. There was a gap formed here, and then we get really nice displacement through the gap, and boom, there we go. We get a nice break-even point here, and then a nice 1 to 3 that was being put in there. And I think that was the end of the move. Oh no, it was not the end of the move for the day. Actually ended up going even lower. My goodness, yeah. I guess this as well could have been a potential position here as well. I mean, this is just so low down at that point. You'd have a gap right here, and then you could have entered on this candle right here. Stops above the highs, break even point here, and this would have been a break even in the end. So yeah, these were just some examples on the massive silver play that happened. Like I said, didn't actually take any of them, but they were some very good examples of some good quality trades that follow my system very well. So yeah, that was it for me. I think in conjunction with my mistake, it was a +5 R week, which is really cool. Nice way to end January. January hasn't been the best for me, but happy that we're finally getting out of it, and excited to do the trade the rest of 2026. So yeah, hopefully you guys enjoyed this trade recap for the week. Hope you guys learned something. Any questions about the system or kind of the way I trade, leave them in the comments down below. And yeah, look forward to chatting to you guys next weekend.